Well, you guys enjoyed the recap so much on Friday. You're getting another one here today, Monday morning. I finished the day just around $3,500 in profit, which in total dollar amounts is pretty decent. But I wasn't super happy with my trading today, as we'll dive into during the recap. The stocks on watch today were mostly lower priced stocks, but there were a couple of wild cards. I ended up getting really focused on one stock, and that became an opportunity cost where when another stock popped up, I was already in a position. So now I had to divide my attention between two stocks at once. Neither one got my full attention. I didn't trade either of them as well as I could have. And well, the result today was that I was green, but it could have just as easily gone the other way. So I'm going to break it down in today's recap. By the way, if you have not already picked up a copy of my book, I've got a copy. I should get a couple more to have around my desk. How to Day Trade the Plain Truth. It is a bestseller on Amazon. So thank you guys for helping make that happen. I think you'll enjoy it. So make sure you check it out. And I also am excited that I just uploaded a video, a full-length episode over the weekend on some of my favorite chart patterns. So I'll put a link at the end of this video for you guys to check that out, and I think you'll enjoy that as well. So let's jump into the recap and break down the trades from today. All right, let's go ahead and jump into it. So when I sat down this morning, our leading gapper was JTAIZ. JTAIZ, this is actually warrants for the stock JTAI. And I was kind of honestly surprised that the warrants were up as much as they were, gapping up 260%. I was like, whoa, okay, do we have something going on here? But JTAI was only gapping up like 27% at the time. And as we came closer to the open, it ended up pulling back. Now, it did end up rallying, but in spite of it rallying, the warrants did not rally. So kind of a weird divergence there. Typically warrants, and I'll put a link in the description, or I'll pin it to the comments of the definition of warrants so you can look at it in more detail. But typically they trade pretty closely to the underlying stock. They're usually cheaper than the underlying stock. And if the underlying stock ends up making a huge move, like 300, 400, 500%, then the warrants can go up sort of a ratio to that, but it's pretty much always lower. The thing with warrants is that they don't get circuit breaker halts. So if you have the underlying asset squeeze up and get halted, then you could keep trading the warrants even while the main stock is halted. And as you're watching the possible resumption price changing, the warrants will keep going up. But anyways, that didn't happen on JTAI. I'm not really sure why it even went up as much as it did. But actually, this is kind of a theme for today. So JTAI, why did it go from $1 all the way up to $4? I don't have a good answer for that. I'm not sure why it did. Was there some opportunity in there? Yeah, there was. I mean, it obviously made the move. There was opportunity long and short, but it's just kind of odd. So our second leading gapper was KTTA. So KTTA gapped up 174%, which was impressive. I managed to lose $679 trading it. Let's see. So my P&L is right here. So the thing with KTAI was that this stock popped up at, what time was this? 8:01 a.m. It popped up and it went from 45 cents all the way to 96 cents a share. Now, I didn't jump in that candle, even though I typically would be interested in trading that initial spike. I didn't do it on this stock because it was too cheap. And it never broke over $1, so I really shouldn't have traded it at all. But I did take a trade on it right here. So as it broke over 87 cents, let's see, right here, 88 cents, this is where I got in, right on this candle. I held through this pullback, and then as it came up, I added, let's see, so I started with 10,000 shares, and then I added another 10,000 as it went up to 93. I was like, okay, if this thing breaks over $1 a share pre-market, we could get a squeeze up to $1.10, $1.15, $1.20. Once the bell rings, I knew that this would have back-to-back circuit breaker halts. I'll put a link in the description also for circuit breaker halts so you understand when you're going to have back-to-back halts every 15 cents and when it's going to be every 20% or 10%. In this case, it was going to be every 15 cents. So I was like, I don't want to trade this when the bell rings, but I think it has a chance pre-market of giving us that squeeze. So I ended up being wrong on it. And on the 20,000 shares, I lost $679. Which, is not obviously the end of the world, but kind of a bummer. While I was in that trade, I'm holding that position. I'm in it with the full 20,000 shares. So this was a little after or right around 9. And we see a stock hit the scanners. And these are my scanners that I use every single day. These are the only scans I use to find stocks to trade. So I'm going to scroll back here a little ways. So a stock hits my scanner, and that was SLNH. It hit, I'd have to scroll way back here. Well, I'll just pull up the chart. It doesn't really matter. So it hits my scanner, and I think it was at $4, maybe $4.20. So SNLH or SLNH. All right, so SLNH hits my scanner, and it's squeezing up. And now I'm in this moment where, okay, stock's hitting my scanners, and I'm trying to do two things at once. I have a position for 20,000 shares I'm trying to manage my risk on. And now I see a stock hitting my scan that is moving quickly. So the first thing I noticed when it hit the scan was the price and the float. So the price was about $4.20. It hits right here on this candle. And I'll actually go in on the 10-second chart here because it's going to be a little bit easier to see this. So on the 10-second chart, we're going to get zoomed in right in here. Let's see. So 10-second chart on this. It pops up, the stock pops up, and it goes up right here on this first candle up to about $4.60. And then it pulls back, as you can see right here, down to $4.46. And then it squeezes up over $5. So my workflow basically, when a stock hits my scanners, I click on the stock, it updates my charts, and now I'm going to see the news headlines right here. So typically when we have a stock that's like squeezing up right now, it's moving quickly, I click on it, I'm looking here, and then as this is loading, I'm actually clicking on here, then I'm going down and I have to type the stock a second time in my level 2 window. So now I'm pulling up the level 2 and I'm looking back up here. And what happened on SLNH was it hit about 440 and then kind of did a micro pullback. So as it's doing that micro pullback, I'm looking at the level 2 and I'm like, okay, this must have news. I saw right here that there was a headline, but I didn't check the date. I was like so kind of flustered from being in another trade and then this all of a sudden hitting the scanners that I was like, it's squeezing up. There's got to be news on it because, you know, I'm thinking why would a stock be squeezing up this much if it didn't have news? So I punched my buy order when I saw 440 on the level 2 and I was like, I'm going to buy 2,000 shares and I'm looking at this for the break over 450 and then a possible move up to $5 a share. Now here's where things get interesting. I pressed the buy button when I saw 440 on the ask, looking for that break of the $0.50, but I filled my order at $4.24. And I pressed the buy button twice. I didn't realize what I was getting filled at. I just thought I was getting in at the $0.50 right here at about 450. It then goes up and I add as it breaks over 5 and I add it again for the break of 550. And we hit a high here on this candle of 565, which was impressive. So we have 565 on the ask and we had a bid of like 522. So after I added up here and then it pulled back, I was like, I better take some profit and I hit the bid. So I just hit the bid at like 520 and 508 and then it drops back down here to 450. And I'm like, okay, well, you know, I'm going to watch for first 1 minute candle to make a new high. And then I realized, wait a second, that headline that I saw is old. It's from December 8th. And also I was a little cautious about the sector. At first I thought this was a pharmaceutical company because I sort of recognized the ticker, but I think this was, again, I was mistaking this for another ticker that was sort of similar that we traded maybe last week or the week before. In total, I would say, you know, I ended up doing well on it because I got in at 425, which was a great entry. And then even though I added up here at 5 and 550, my fill was, it brought my average up to like 450 or 455. So I still had a pretty good average and was able to lock up about 60 cents a share right in that window. But this kind of highlights the challenge of multitasking And I really don't like taking multiple trades at one time. In fact, I could argue that my trade on KTTA was a bit of a opportunity cost for being able to fully focus on when a stock did hit the scanners, because you never know when a stock is going to hit the scanners. And so in the case today, I'm kind of dicking around on this stupid low price stock, jumping in with now 20,000 shares. So now I'm focusing on it pretty closely. Yeah, it had some potential, but also realistically, this isn't my wheelhouse. I don't like trading these stocks. And then all of a sudden, a stock pops up on my scanner that could be a good candidate. And now I'm like flustered because I'm managing two positions at once. And I'm like, wait, okay, I don't want to be holding 20,000 shares if this thing flushes 20 cents on me. I'm going to be down $4,000 on that position. But at the same time, we've got something hitting the scanners right now. It's got the right flow, it's the right price, and I'm assuming that it has news. But in fact, it didn't. So, you could say, well, why did it initially pop up? And just like JTAI, I don't know. You have stocks that for whatever reason will pop up, and it could be, a short seller covering. It could be it could be someone buying that just likes the stock for a bigger move, a swing trade. You don't really know, but something happened right here, and it led to the stock going from about 394 up to about 440 right in here. And basically, as soon as it hit the scanner and I saw it, based on how much it had just moved, 10% in less than 5 minutes, I was like, okay, something's going on. And I jumped on that momentum. Probably similar to how people might have jumped on JTAIZ earlier this morning. You've got a stock that's popping up and you're like, okay, I'm going to jump in. And, this is sort of the challenge with trading momentum in general, is that when the market heats up, you feel like if I don't jump in quickly, I'm going to miss the whole move. So like INTS on Friday, for instance, this one ended up going from, what was it? $4 a share all the way up to $15. And it happened quick. And if you weren't quick to jump on it, you end up sort of missing that whole move. So the way I trade generally is that when something hits the scanner that really closely meets my criteria, I go ahead and jump in. And I try to set a tight mental stop loss, usually around the next $0.50 whole dollar. So if I'm getting in at 440, my stop is 4, which, is a 40-cent stop, but that's the whole dollar. That's sort of the logical place to set a stop. If I add at 5, my new stop is now 5. It's got to break over and hold that level. So I really think of trading around these $0.50 and whole dollars. And, I think for me in all my years of trading, one of the things that I've noticed is that a lot of these stocks, let's say we'll see a stock that's squeezing up and it comes up to, $3. You've got that whole dollar psychological level. It pulls back a little bit. And then you get that bust through 3. Now, sometimes it'll pull back. And if it can hold over 3 right here, then we're looking at the next leg up. What's the next level? 350, right? 350. Now, some of these stocks that are really cheap will even get a little resistance around 325, quarters too. But they really do seem to respect these levels well. So the way I like to do it is when I see something squeezing up like right here, I'll get in at like 290, 285 to anticipate the break through that level. If it hits this level and has resistance, I might even still be able to hold during this first pullback because I'm in a little early to anticipate the move. But if not, I can stop out with a relatively tight stop, 75, 80. I don't have to let it go all the way back down to 250. I could stop out sooner. And then I can get back in right here as it comes back up. Sometimes they just, push right through that whole dollar. They don't even pull back. So that's where I get into that kind of adding it, the whole dollar, adding it the $0.50 and continuing. And that's exactly what I did on INTS on Friday. That gave me nearly $14,000 of profit. And really, it was a very quick trade when that thing started squeezing. So, I think that with these stocks, there's a little bit of an element of surprise. It's hitting the scanner and you're like, okay, something's happening. I got to jump on. In a hot market, I jump faster. In a cold market, I'll get burned on those trades. Just like, and it was actually close on SLNH. I mean, if I'd been a little slower on this, well, I would have been buying a lot higher. And then obviously that wouldn't have been as good. But if I'd been slower and I wasn't getting in till 5 or 550, then, this could have been a bigger loss. And the fact that I didn't catch that this headline wasn't fresh, the fact that I kind of was mistaking this for a biotech that has a similar ticker, and I was just confused. All of that speaks to the fact that by being in KTTA, this, even while I was looking at the next trade, this still had my focus because I was holding 20,000 shares. I had to manage my risk on it. So even for me, with all my years of experience, I still find it really difficult to take multiple trades at the same time. And I think that this is a good reminder of how focusing on a B quality setup, because at that moment it was the best. It was the best of what was available, but it wasn't A quality. But this became a distraction. And that could have caused me to lose money on the next trade because I wasn't able to be as focused when SLNH came along. I was sort of distracted and half focused because I only got half of my attention. And that led to me making some mistakes on it. So, that's kind of an interesting takeaway here today. And this ended up being a nice kind of head and shoulders pattern coming back down. I don't totally like my trade on KTTA. The setup was, I understand the setup for the break of $1. Like that was all fine, but I know that my metrics don't really support me trading these low price stocks. And because it was during the window when there was still a chance of something coming up that really did meet my criteria much better, I should have just stayed patient and waited. And it would have been better if today actually had been a no trade day in a way, because I would have said no trades on KTTA because I don't like the price. And then when SLNH popped up, I would have been more focused. And I would have been able to say, well, there's no fresh news today. So then this is a challenge because when something is first popping up, it's possible that it won't have news, but there is news, and this just hasn't populated yet because it can take a second. So I might have even still taken this trade, and that would have been fine because I would have said, well, it was popping up, I hit the scanner, and I was jumping on the momentum. I wasn't sure yet about the news, but at least I would have been more confident in that trade. Although I sort of think I wouldn't have taken it because I would have also recognized that this probably wasn't a tech stock. But the thing is, like when it's a holdings company, you can't be totally sure, without clicking off and then loading and being like, wait, what is this one? And something that we often say is that we trade tickers, not companies, because as active traders, we're so focused on the technicals that, it doesn't, in a way, we're not thinking about what this company does. We're not thinking about the long term. We're just thinking about like right now, this thing is moving up. So I was going over earlier today for Warrior Pro members, I was going over some of my live trades from last week. And I had this trade, which one was it? It was NEXI, which I'll just show you briefly. So the stock was so wild. So NEXI makes this crazy move right here. You could see this thing goes, what's going on with this? This thing went from $4 a share all the way up to $14 right here. I mean, that thing was really wild. And then this one was also pretty crazy. MINM, this one was pretty wild too. And the thing with NEXI is that when that move first started, and I sort of missed like this whole first leg of the move because I just sat down late. So I kind of sat down with a little bit of FOMO getting in kind of high, as you can see up here. But like when this first started to take off, if you're not quick to jump on and just set a stop, you can end up just sort of missing that whole first leg. And this thing went from like 4, 6, 8, 10. I didn't even take my first trade on it until 12:21. Now I still end up having a pretty good day. It's like $6,500. MINM, this was one where I was a little faster to jump on it. And if you sort of look at this price action here, like, okay, like this is a proper pullback, and sometimes waiting for that first pullback does make sense. But there's other times where it's like, right there is a move from $2.50 to $4. And if you weren't aggressive on that, it's totally possible that this could have done a round trip and come all the way back down, right? And so there's still volatility in here. And so your option is either to sort of jump on the momentum going up or to do a counter trend and wait for the reversal coming back down. But naturally, doing reversals and trying to guess reversals on some of these stocks, especially with low floats, can be super risky because they can just, they can whip on you so fast. Next thing you know, well, INTS on Friday. Next thing you know, it's going from, this went from like $5 all the way to $15. And it happened fast. So shorts on this, you start just adding, and then you're like, uh-oh, now we're at 15. And then that's the day that, it goes to 18 to 20, 24 to 40. And it's like my short at $5, the most I could have made is if it went to 0. And now it's, 300% against me and it's still going up. So rather than try to guess reversals, I trade with a trend, and it means you got to jump quick. And so today I jumped quick, and today wasn't a great day, but I think if anything highlights the importance of being able to remind yourself to focus on the best quality setups, and that sometimes not taking any trade is really the best, because focusing on low quality can be an opportunity cost for when something does come along that looks better. So if you guys enjoyed this recap, please, I hope you hit the thumbs up. I hope you're subscribed to the channel, and I'll see you for the next one tomorrow. All right, I'll see you guys in the morning.